He's done it. Donald Trump will become the 45th US president after an extraordinary victory over his rival Hillary Clinton, which defied pre-election polls, which led us all to believe it was in the bag for Clinton. But after winning key battleground states such as Florida and Ohio, his win was secured. Well, for the financial markets take on the outcome, I'm joined by Mike Ingram from BGC Partners. Mike, wow, he's done it. This is a shocker, isn't it?
Well, you almost get to the point where if the pollsters think one way, then by definition you should go the other way. They've had an absolutely appalling record of the last couple of years.
Yeah, completely useless.
But I mean, the way the markets handle this is perhaps illustrated by the sort of bungee jump that we've seen in asset prices. So as the swing state data came in, 1 o'clock, 2 o'clock UK time, we saw this plunge in risk asset pricing. We saw gold firming up. We saw S&P futures plunging by 5%, limit down. And then as we get towards the European Open, it kind of gets moderated a little bit. Maybe 2%, 3% down. And now we're looking at a situation where the FTSE, for instance, is kind of breaking even. Interesting to see, though, you can see the influence below that index level. You can see the influence of that vote. So, for instance, top gainer today, Ashtead, key proxy on US infrastructure spending. Trump says that he wants to spend more money on building US infrastructure, which is crumbling. We all know that. On the flip side of that, we see some of the European banks taking a beating. Yes, we know that banks haven't exactly been flavour of the month for all sorts of reasons within Europe. But one of the things that Trump wants to do is just tear down Frank Dodds. So you've got this incredible regulatory arbitrage opportunity setting up just the point in time where actually London as a financial centre is looking quite vulnerable. Does New York claim it all? Well, to some extent, the market seems to be placing these bets. So yes, headline index looks quite calm, but it's already factoring in some of these policies. Okay,
and US dollar, where can we see that shifting to?
Well, it's a very mixed picture actually, because so for instance, the immediate issue is, are we going to see a Fed rate increase in December? So the market finally got to this point where it was finally comfortable with December rate hike. 85% probability priced in. Slip back to 65%. Now it's tricky for the Fed because the only thing that the Fed can probably point to in December is, well, market volatility. Market volatility, we were dodging the bullet yet again. If we have another decent jobs number, odds on that's going to be the case. If the US economy seems to be on track, they're going to have to raise rates. But over the longer term, we know that Donald Trump doesn't like low rates. He says that low rates are part of the problem rather than the solution. I happen to agree with him, perhaps not for the same reason. He doesn't like Janet Yellen in the chair of the Fed. So, Fed is in a very, very tricky situation altogether. The other thing to take into account, of course, is one of the things that Donald Trump fought his campaign on was the repatriation of all this offshore cash being accumulated by companies such as Apple, and saying, well, look, we'll give you effectively a partial tax amnesty, 10% tax, bring the cash back on shore, no questions asked. If he managed to drive that through, then of course that's a fantastic long-term support for the US dollar. Yeah, that's a big inflow. The question, I suppose, then becomes is, well, what are these companies going to do with the cash? If what they're going to do with the cash is returning it back to shareholders through buybacks and dividends and not invest in the real economy in the US, then of course we can expect a backlash among voters. The thing I'm thinking of is, are we perhaps going to have a replay of the first 2 years of the Obama administration?
The Republicans should be very happy right now because they've got everything. They are fully in control. And surely for the financial markets, that means no nonsense. Surely it means it would be easier to get policies put through.
Your question presupposes that the Republicans are a sort of coherent whole. I think it's very clear that they're not. Obviously you've got the Tea Party movement's been niggling away there for many, many years ago. We've got Donald Trump, which in the final few weeks of the electoral campaign seemed to be at war with his own party. So I suppose one of the questions at the moment is, to what extent does Donald Trump say, well, look, I've got a mandate from the US electorate for radical change. I am going to push that through. In which case the question becomes, how much of the Republican Party do you take with you? Because a lot of them have been in place for years, decades in some cases. Do we see a split in the Republican Party, or do they say, do you know what, we've got our man in place, this is the best thing we could have possibly hoped for, we haven't seen this in many, many years, let's kind of roll with it and help to enact his vision of where the US economy needs to go. As far as I'm concerned, this basic idea that we've outsourced a lot of the policy making to central banks, pretty much all the policy making to central banks, in pre-crisis years, it hasn't really worked for most people. We've all talked about asset price distortions, and okay, if you've got asset, if you have assets, i.e. if you're wealthy, you're doing very well, but everybody else is kind of in a difficult position. You're seeing pushback. My thesis was always that it's going to be pushed back into the political sphere, sort of a Marxist sense, at precisely the worst possible point in time, where politics is in a very enfeebled state, where the political establishment is in disarray. We've seen this around Brexit, the UK referendum. We're seeing it in Trump. And you know what? Elections, France, Germany, next year.
Yeah.
Roll on 2017, volatility rules, okay.
Absolutely. Marine Le Pen, here we come. Just to conclude though, how do you think the markets will finish up the week? Do you think that we are going to see some calm?
But people are looking for sort of clues as to what a Donald Trump administration would actually look like from January 2017. And if we get some headlines generated on the back of that, we are going to see the market move in and around that.
Okay, we'll leave it there. Mike Ingram, thank you very much indeed for that financial analysis of the US elections. So, Wall Street traders have indeed returned to their desks in quite a different world today that actually not many people in this industry were expecting. We're going to have full analysis all week long on the US elections and how the markets are adapting to this new world order. Thank you for watching.